3. Okay, noted. Okay. So let's look at the chapter 3, that is long-term liabilities. Okay, what is long-term liabilities? Long-term liabilities is actually our liable or our accountability in order for the business to pay back the debts. Okay, that's a loan. That is a long-term liability in long period. Okay, long-term loan. Okay, long-term or long period. Okay, so this is just the learning objectives. Okay, so you will explain the types and payment pattern of notes. Okay, notes is called, we call it as a loan also. Okay, explain and compute the present value of amount to be paid at a future date. Describe interest accrue when bond payments period differ from accounting period, and also describe accounting for lease and pensions. That's for the bills. Okay. So next, okay, what is the analytical learning objectives? First is compare bond financing with stock financing. Okay, what is the difference between bond financing and stock financing? And assess that features and their implication. And also compute the debt to equity ratio and explain its uses. That is the learning objectives. Okay. And then let's look at the bond. Okay, what is bond? Is actually a loan. Okay, dia adalah hutang yang dikeluarkan issuing by the company that needs the money. Okay, so some of the investor or bond holder will buy or will um, accept the terms in the bond certificates so that the business or the corporation will get the money from them. That is, we call it as bond. Okay. So what is the advantages having the bonds for the corporation? Okay, bonds do not affect owner control. It means that if the company, okay, want to take a debt from the bondholder, it means that dia tidak akan bercampur ataupun dia tidak akan effect, okay, owner control ataupun equity of the company. Dia tidak akan melibatkan sharing shareholders, tidak melibatkan pegangan equity syarikat, pemilikan syarikat. Dia tidak akan menyebabkan pemilikan syarikat kepada setiap bondholder. So bondholder ni dia hanya memberi pinjaman, okay, kepada syarikat. Dia tidak akan contoh kalau bondholder tu bagi duit pada syarikat, then you akan memiliki saham syarikat. Tak, dia tidak tertakluk kepada owner control. That is the first advantages of bonds. The second one is interest on bond is tax deductible. Maknanya dia tak akan dikenakan bila kita keluarkan interest on bonds, kita bayar interest, so dia tidak akan dikenakan tax. Okay, tax ataupun cukai from the government, dia tidak akan dikenakan cukai. So bond can increase return on equity. Dia akan meningkatkan capital kita lah. Okay, increase the capital of the business because we as a business or corporation, okay, make a debt from the bondholder, dapat duit, dapat cash, dia increasekan capital kita ataupun return on equity. Okay, so let's look at the explanation there. There are several advantages for issuing bonds instead of stock. Stock is different from bond. Bond is loan. Okay, stock is share. Okay, shareholders that affect the owner control. Okay, but bond did not affect the owner control. Okay, companies issue bonds. Look at where is my pen? Okay. Look at the notes below the slides there. Okay, Company issue bond because it is a way to raise needed capital. Kenapa dia tak fungsi pula ni? Oh, dia tak nak put kat bawah ni, tak boleh. Okay. Without sacrificing ownership in the company. Dia tak akan melibatkan ownership ataupun pegangan syarikat. Okay. The interest on bond is tax deductible, thereby reducing the actual tax paid by the company. Bila kita ada bayar interest, because if we make a loan or debt from the bondholder, so kita kena bayar tax and kita kena bayar interest. Okay. Wajib kena bayar interest ataupun faedah. In Malay we call it as faedah ataupun bunga. Okay. So bila kita ada bayar interest on bond, kita tak perlu bayar tax. Kita akan mengurangkan tax payable of the company. That is the advantages of the bond. Okay. And then issuing bonds can increase the return on equity if the company earns a higher return on the borrowed funds than it pays in interest. If we got the highest capital or cash from the owner, from the bondholder, so that we can pay the lowest interest. Okay. So kita jadi lebih better lah return on equity if we issue the bonds. Sekejap hold on. Sorry class. Okay, let's continue. Okay, that is the advantages of bonds. And then what is the disadvantages of bonds? Bonds require payments of both period interest and the par value at maturity. Samalah maksudnya. Kalau kita beli, kita meminjam duit, okay, pinjam duit daripada financial institution ataupun daripada bondholder, so kita mesti kena bayar lah. Requires the payment of periodic interest and par value at maturity. Kita bukan sahaja kena bayar interest, bahkan kita kena bayar semula par value dia, nilai yang principal yang nilai yang tidak termasuk dengan interest. That is a disadvantage. Okay, and then bonds can decrease return on equity when the company pays more in interest than it earns on the borrowed funds. Okay, kalau kita tak pandai nak pilih bondholder yang mana untuk kita dapatkan pinjaman, so kita akan kena bayar interest more than equity yang kita dapat hasilkan. Okay, so maknanya bonds, if we issue the bonds, there is a disadvantages also. Okay. On the other hand, look at the notes below. On the other hand, there are some disadvantages to issuing bonds. Bonds require regular payment of interest. Of course, we must pay the interest, okay, and repayment of the principal borrowed. Okay, that is the par value. These require cash payments may be difficult if a company faces tight cash flows. If the company did not have much money, how come that the business or the company pays the interest and also that the par value of the bonds, right? So bonds can also decrease the return on equity if the company pays more in interest than it earns on the borrowed funds. Okay, so kita before the company or before the corporation or before the business issuing the bonds, so many things that they must take into consideration. Okay, so let's look at this next slide. Okay, bond issuing procedure. This is the procedure on how the company issue the bonds. Okay, first a company sell the bonds to the investor. Okay, this is the investor that will provide the money for the business or the cash for the business. We call it as investor, and then an investment firm called an underwriter resell the bonds to investor also. There have two types here. Okay, first is whether that company itself sell the bonds, or the second one, the investment firm, or we call it as underwriter that resell the bonds, and then a trustee. A trustee is the person that monitor the bond issue. Okay, so let's look at the detail there. Bonds are securities that can be readily bought and sold. A large number of bonds are traded on the New York Exchange and the American Exchange. Since bonds are bought and sold in the market, they have a market value or price. Of course, if the bonds is issuing, also will come with the market value or the price. Okay, value of the price, selling price of the bond. For convenience, bond market values are expressed as a percentage of their par or face value. Okay, when an underwriter sells bonds to a large number of investors, a trustee monitors the bonds issue and protect the bondholders' interest. So is the bondholders' interest? This is the bondholders' interest, investor. Okay. Bondholder, it means that when the investor give money to the company, and then the company will issue the certificate. Okay, the certificate that consists of the selling price of the bond and also the percentage of interest that the company must pay to the investor. Okay, so if the investor give company, for example, 1 million, the price of the bond is 1 million. Okay, and then if the investor give to the company 1 million, and then the company must pay back the investor 1 million plus interest. Okay, interest stated in the certificate of the bond itself. Itu cara dia. So kalau you ada banyak duit, okay, bila ada company yang issue bond, you boleh beli, okay, bagi duit kepada dia 1 juta kepada company tersebut, and then every month or every 6 months, setiap waktu period maturity date tu, company akan bayar kepada kamu sebagai investor sebanyak berapa? 1 juta plus dengan interest. Lagi besar lagi dia punya harga yang kita kena bayar kepada investor. That is called bond issuing procedure. Okay, can you understand, class? Bond issuing procedure. Is that clear? Yes, madam. Okay, very good. Okay, next. Okay, for the basic bonds. Okay, this is the basic of bonds. Okay, bond interest payment. Okay, the corporation must pay the interest. Okay, this is the the things that I've told you before this. Okay, bond interest payment. Okay, the corporation itself, Allah. The corporation must pay the interest to the investor. Okay, so how the bond interest payments is paid? Okay, when the bond is when the bond issue at the date, and then on the maturity date, maturity period, okay, we must pay the interest. Okay, interest payment. How to calculate the interest payment? Okay, bond par value. Okay, how much is the par value? For example, 1 million. We must times with the contract interest rate times with the time. Okay, how many maturity date or maturity period of the business. Okay, this is the formula how to calculate for interest, bond interest payment. Okay, bond at par value times with the contract interest rate in terms of percentage. Okay, that will be stated in the certificate. Alright, so you must multiply with the par value, bond par value, and times with, okay, time, okay, or period of the maturity date. Okay, bonds are debt. Okay, I've already mentioned bonds are debt. Okay, dia adalah hutang. Okay, they are similar to other debts a company issue. However, one difference is that state and federal laws govern bond issue. Okay, the legal document identifying the right and obligations of both of the bondholders and the issuer is called bond indenture. Okay, the bond indenture is the legal contract between the issuer and the bondholders and it specifies how often interest is paid. Maknanya dekat dalam bond indenture tu dia akan ada segala syarat-syarat lah. Okay, yang bind together, okay, yang mengikat antara, okay, dia adalah legal contract antara company, okay, antara company dan juga ataupun corporation dan investor. Mesti ada legal contract. Okay, legal contract mesti ada supaya masing-masing akan okay, contoh corporation dia akan berjanji untuk bayar semula duit yang investor dah invest ataupun dah bagi kepada corporation sebab dia adalah hutang. So hutang kita kena bayar. Okay. So on the issue date, the bondholder give the company the market value or selling price of the bond. Okay. The company give the bondholders a bond certificate. Alright. So at regularly scheduled this during the life of the bond, the company pays the bondholder interest. Okay, the interest is calculated as a bond par value times the contract interest on the interest rate on the bond times the length of time the bond has been outstanding during the year. Just like all interest rate, the contract interest rate is expressed on an annual basis. Okay. At the maturity date, okay, the company pays the bondholders the bonds par value. Now let's see how they account for a bond issue. Okay, macam mana? Okay, let's look at the example here. Issuing bonds at par value. Okay, so King Company, the name of the corporation, issue bond at a par value. Okay, how much is the par value? 1 million ringgit, for example, or $1 million. This means that the stated contract interest rate on the bond and the market interest rate on the bond are equal. So see here. Okay, the stated interest rate inside the certificate is 10%. The same goes with the market interest rate. Okay, market interest rate is also 10%. So equal, issue bond at par. It means that King Company wants to issue at par only. Okay, this is the first condition. At par means that the interest rate is equal to, this interest rate is 10%, right? Okay, equal to the market interest rate. Okay, market interest rate is also 10%. So that's why if the company issue the bonds at par value. Okay, so King Company must pay the interest on the date 30th June and also on 31st December. Twice in a year. Twice in a year, okay? The interest is paid twice in a year. It means that after 6 months, they must pay interest. After 6 months, they must pay interest until the maturity date, okay? At the 2032. That is a long time, right? 2013 until 2032, around 20 years, okay? Uh, Around that 20 years, you must pay the interest of 1 million. How to calculate the interest? And later on, I will show you how to calculate. Alright. So what is the journal entry? So this is the journal entry. The bonds are dated. Okay. The date on issuing bond is on January 1st, 2013. And maturity date is on 30th, 2032. Okay. On the issuing date, King would debit a cash. So this is debit. Okay. It means that the bondholder gives the money to King Company. Okay. Amounted to $1 million. Okay. You must debit. Okay. This is a journal entry when issuing bond at par. Okay. Debit 1 million. And then the bond payable account is always credited. Okay. Credit with the bonds payable. Okay. Bonds payable is our bond or our loan. Okay. Loan increase. When the loan is increase of the company, we should credit. Okay. We should credit in journal entry 1 million. So that's why debit cash. Okay. We got the cash from the bondholder and then credit bond payable because the cash that we get is from loan or bonds. That's why bonds payable is credit 1 million. Okay, can you understand? Why is it debit cash? Why is it credit bond payable? Because bond payable is our liability. It means that we must pay back, okay, the amount of cash here. The amount of cash that the company received, later on we must pay back. Okay, pay back the bond, so we call it as a liability. So that's why we must credit bond payable 1 million. Okay, the bond payable account is always credited for the par or maturity value of the bonds. Alright, and then let's look at the next slide. Okay, how to calculate the interest expense. Okay, the same example, King Company. Okay, interest expense on bond at par. The entry on the 30th June 2013 to record the first semi-annual interest payment. Okay, we have 20 years maturity date. Okay, 20 years maturity date. Maturity date. Okay. Okay, so on the first year we must pay 2 times. Okay, because of semi-annually, the first semi-annually means that 2 times in a year. Okay, we must pay 2 times in a year. We must pay the interest. Okay, so how to calculate? What is the journal entry for record the interest expense? The first one, bond is debit, bond interest expense, credit cash. Okay. We must pay the interest by cash. That's why our cash is reduced because of we must pay for the interest to the bondholder 50,000 and then debit bond interest expenses because expenses is our uh, because the bond is our expense that we must pay back. Okay, payment. Okay, so that's why kalau expenses increase we must debit. So that's why in journal entry bond interest expense is debit, credit cash 50,000. Okay, how to calculate? How to calculate the interest payment? Okay, bond at par is 1 million and then times with 10% interest rate stated in the certificate times with the time is 1.5 year, 1.5 year, okay, 6 months, okay. So you will get 50,000 ringgit. So this entry, okay, is made every 6 months until the bonds matured for 20 years. Okay, so in 20 years, okay, we must pay interest, okay, about 40 times. Okay, 40 times because in 1 year you must pay 2 times the interest expense. Alright, so how we want to calculate the interest payment? 1 million at par, you must time with 10% interest. Okay, interest stated in the certificate and also interest, also the same interest for market interest. Okay, market interest rate also 10%. So times with half year, 6/12 or 1.5 year. Okay, 1/2 year. Okay, so you will get 50,000. Okay, so make sure that you know how to calculate the interest payment. Amount of the bond at par value times with interest rate times with the period of, okay, the periods or the months of the interest payment, that is half year. So you will get 50,000 ringgit. Debit interest are spent 50,000 and then you must credit cash 50,000. Okay. So on the 30th December 2032, when the bonds mature, King Company meets the following entry. Okay, at the last year of the maturity date. Okay, so the bonds, the journal entry is debit bond payable because we already paid all the interest and also it means that on 20 years later, then our debt is extinguished. Okay, so our debt is extinguished or our debt is settled down. Okay, so debit bond payable. So because the liability is reduced, okay, so that's why we must debit the liability. So the liability of bond payable, debit 1 million, and then, okay, the cash, we must credit 1 million because we already pay the money to the bond holder. Okay, this is the journal entry for the last year of maturity date. Okay, that is 31st December 2032 after 20 years from the issuing date. Okay, issuing date. Okay, selama 20 tahun. So the debt has now been extinguished. Okay, dah habis dah. Kita tak ada hutang dah dekat bondholder. Kalau dah lepas 20 tahun kita dah habis bayar expenses, so cukuplah untuk kita bayar semua sekali bond payable. Okay, boleh faham? Boleh tak? Siapa tu nama dia? Joshua, is it okay? Yeah. Yang ni. Okay, yang ni adalah journal entry after 20 years. Kan dalam masa 20 tahun, dalam masa setahun kita kena bayar interest dua kali kan? Interest dua kali, berapa? 50,000, 50,000, 50,000, 50,000. So sampai pada akhir tahun yang ke-20, kita assume yang kita akan habis bayar loan tersebut. So that's why last kali tu, mula-mula awal-awal bond payable tu kita credit kan. Okay, and then debit cash, right? So tapi bila kita dah habis bayar, so dia akan jadi terbalik. Debit bond payables 1 million and then credit cash 1 million. Okay? Boleh? You sure? Alright. Okay, so next. Okay, tadi kita belajar how to calculate what is the journal entry. Okay, when the bonds is issuing at par. Maksudnya, interest rate dia stated dekat dalam certificate sama dengan dekat market value. Okay, dia bond issuing bond ni kita kena tengok juga bond market value punya interest rate. Okay, so kalau sama dengan market value of interest rate, so maknanya kita tak ada premium lah. Okay, tak ada lebihan ataupun tak ada discount. Kita kena bayar sama juga dengan apa yang kita dah pinjam. Okay, tetapi there is a situation where we issue bond at discount or premium. Okay, another two situation. How to know when the bond is issued at discount, and how can we know that the bond is issuing at a premium? Okay, this is the difference. Okay, contract rate is when the above market rate, okay, bond sales is at premium. Okay, but for the contract rate is equal to the market rate, so same goes like the example before this. So the bond is sold at a par value. Okay, but how about the contract rate is lower than the market rate? So it means that the bond we sell the bond, or we issue the bond at a discount. Okay, so in almost all cases, the stated contract rate and the market rate of interest will not agree. It means that the different market rate and also the contract rate in the certificate dia berbeza. When these two interest rates are different, it might make sense to you for us to just change our stated rate to equal the market rate, and then everything will be fine. Okay, well, we can't do that. Remember that the bond certificate lists all of the specific about the bond, including the interest rate, because we have to print the bond certificates in advance. We are stuck having to pay the interest printed on the bond certificate. So sebelum kita nak tentukan rate yang kita kena bayar interest, kita kena tengok dulu market punya interest. Okay? Itu maksud dia. Kena tengok dulu market interest, percentage yang kita nak bayar interest tu. Berapa percentage market rate, barulah kita tentukan stated rate kita berapa. Okay? The only thing that is not printed on the bond certificate is selling price. So, the issuing company, company yang keluarkan bond tu, maknanya company yang nak dapatkan duit daripada investor tadi, and the bond investor come to an agreement on the selling price that incorporates the difference in the stated interest rate and the market interest rate. So kalau lah dia orang dah bersetuju nak dapatkan above market rate, so kita akan dapat premium lah. Premium tu maknanya kita ada lebihan duit. Okay. So bondholder akan bagi lebihan. Premium adalah lebihan. Okay, the excess money. Okay. Bagi duit lebih pada kita, so supaya duit yang kita dapat lebih tu kita boleh cover back to pay the interest. Kalau at par value, tak ada. Kita tak ada untung apa-apa. Tak ada excess money. At par value, sama saja, equal to market rate. But kalau at a discount, below market rate, so maknanya kita, kita tak ada dapat, kurang. Maksudnya kita dapat discount, maknanya kurang. Kita dapat tu berkurang daripada apa yang sepatutnya kita bayar. So that is a bond issued at a discount. Okay. So, dia ada jalan kira dia yang tersendiri. Sama ada kita issue at par macam tadi, sama je. Kalau ada at a premium dengan at a discount, kita ada different. Okay. Two types tu kita ada different. How we calculate. Okay. So, jom kita tengok. Yang pertama, we want to know about the first situation when the bond is issuing at a discount. Okay. So, kena bezakan ada 3 perkara. Bond when issued at par, second bond when issued at discount, and the third one is when the issuing bonds at a premium price. Dia ada beza 3 tu. Tengok nanti beza 3 tu. Okay. Yang pertama kita dah belajar tadi at par. Okay. Yang kedua kita tengok at a discount pula. Okay. Okay, the same example, alright? Okay. Rose, okay, tadi at par King company, right? Okay. This is for a next example, that is Rose company. Nama saya dah pula. Okay. In this example, Rose company issue bonds with a par value 1 million and a stated interest rate is 10%. Okay, stated in the certificate is 10%. So maknanya Rose company ni dia nak dapatkan duit daripada bondholder. Okay, dia bagi discount. Dia bagi percentage dia yang distatetkan adalah 10% saja. Tapi kalau you tengok dekat market, okay, market interest dia is higher than the stated interest rate, 12%. Okay, so that we assume that the bond will sell at a discount. Okay, tengok perbezaan dia. Stated interest dia 10%, market interest rate dia 12%. Okay, market interest is higher. Okay, if our bond is paying 10% and the market is paying 12%, how many investor will want to buy our bonds? Okay, tak ada. Okay, sebabnya market kebanyakan kebanyakan company lain yang kat luar tu, dia issue interest 12%. Siapa nak kalau dapat interest sikit, betul tak? 10% is lower than the 12%, right? So every companies out there, it means that market interest rate give the bondholder interest lebih higher, iaitu 12%. Okay, sepatutnya orang bondholder tu dia akan cari company yang boleh issue higher interest, so that they can make more money if compared to company that issue the lower interest rate. So itu maksud dia, okay? So you kena fikir in terms of bondholder. Kalau you adalah investor, bondholder, okay? Mesti you akan pilih company yang issue lebih banyak interest rate, lebih tinggi, higher. Supaya nanti company will pay back every month or every two setiap tahun ke ataupun setiap 2 kali setahun ke, interest yang dia dapat tu lebih banyak. Okay, berbanding dengan 10% sikit saja kan, betul tak? So 12% is higher. So that we assume that the bond, okay, kalau company tu dia hanya issue 10% saja, maknanya bond yang di-issue tu akan dijual at a discount. Discount. Okay. So dia kata how many investor we want to buy our bonds. Sebab dah sikit percentage dia. Interest tu sikit berbanding dengan market. None. Tak ada siapa yang nak ni. So we have to make our bonds more attractive by reducing the selling price to make up the difference in the interest. So nak tak nak, the company that issue the rate is lower than the market interest. Okay. Nak attract pula kepada bondholder supaya beli bond dia. So nak tak nak dia kena issue the selling price at a discount. Okay, maknanya kita jual tu harga dia ada discount lah. Macam tu. Okay. So barulah dia akan attract, okay, company ni akan attract bondholders untuk bagi pinjam duit pada company tersebut. Bagi pinjam duit. Okay. Lend the money for the Rose company. Okay. So in this example, Rose company sells its bonds for 92.6405% of its par value. Means that the par value is 1 million, but then the issuing price is just 92,000 only. Okay. Tak lebih daripada 1 million. So the lowest price lah. Maknanya Rose company ni nak dapatkan duit daripada apa? Bondholder tu dengan the price is below the par value. Okay, below the par value it means that discount. Okay, harga dia lagi murah. Something like that. Okay. Okay, how to calculate the issuing bonds at a discount? Let's see. Issuing bonds at a discount. Okay, par value is 1 million. Okay, we know already. Okay, the par value is 1 million. And then the cash proceed is below the par value. Okay, this is what I said before. This 926,405. 1 million times with 92%. We just so the Rose company will get only 926,405. 926,453 dollars only. Okay, the cash that the Rose company get is the lowest from the par value. Okay, par value is 1 million, but then we just get 926,405 only because we offer the discount about 73,000 1,595. Okay, so we offer discount to the bondholder, so that with the discount we can attract the investor to buy our bond. Alright, so that is the reason why we offer at a discount. Okay, then rather than that, we just offer the interest is lower, that is 10% only. Okay, if we compare to the market value is 12%, is the highest, right? So bondholder will choose the company that issue higher interest rate, if read if compared to Rose company that only offer 10% rate. So that's why Rose company should uh, attract the interest or the bondholder or the investor by issuing the cash, okay, below the par value, so that the bondholder will get the discount 733,595. Okay, so amortizing the discount increases interest expense over the outstanding life of the bond. Okay, so at the end of the maturity date, we must amortize, or we must depreciate the discount amount. Okay, 73,595. We must amortize, or what is the meaning of amortize is depreciation. Okay, that is the same thing. Okay, depreciation. Depreciation. What is amortized? We call also as a depreciation. Ataupun in Malay we call it as susut nilai. So that over the years, okay, contoh 20 years, so discount punya amount ni dia akan susut. Okay, sampai pada 20 years dia akan jadi zero. Daripada 73,595 tu dia akan jadi zero. So bila ada discount, so maknanya interest expenses kita akan bertambah. Okay, interest yang kita akan bayar tu kan every years ataupun every 2 times a years kita akan kena bayar interest kan. So bila ada discount, dia akan increase rate punya interest. Okay, Rose will receive cash 926,405 from the bond investor. Okay, that is correct. So the difference between the par value of the bonds and the cash price received is the discount that we as a Rose company offer to the bond investor. Ni yang saya sebut tadi. Remember that the whole reason we offer the discount is because of the difference between the stated rate in the certificate and the market rate of interest. As a result, the discount represent an additional. So discounting will increase our interest factors that will be amortized or depreciate or systematically allocated to the interest, so that our interest will increase because we want to amortize or discount it or depreciate our discount rate, okay, throughout the years until the discount or the discount amount is zero. Okay, so that it increase our interest. That is not very good for the company itself. So to the interest over the life of the bond. Amortizing the discount will increase the total interest expenses recorded for the bond to equal to 12% the market rate of interest. So kalau ikutkan dia sama saja lebih kurang. Kalau kita issue standard rate kita, stated rate kita tu sama dengan 12%, sepatutnya lagi interest yang kita akan bayar pun sama saja kalau kita nak bayar dengan discount. So ikut mana-mana pun dia akan jadi sama saja. Okay. So bermakna kalau kita issue at lowest interest, kita akan bayar pula discount tu, interest kita tu bertambah, dia kata. Okay. So boleh faham kenapa dia kata discount yang kita dah offer kepada business tu, dia akan menambahkan amount tu, dia akan menambahkan interest kita. So sebenarnya dia jadi sama sajalah kalau kita gunakan 12% interest rate. So dia tak ada pun untung, dekat situ dia tak ada untung langsung sebenarnya. Okay? That is what means by issuing bonds at a discount. Okay. So tengok pula dia punya apa journal entry dengan treatment of accounting. On the issue date, Rose will debit cash. Okay, biasalah bila kita issue date, issuing bond, so kita akan dapat duit cash. So berapa banyak yang didapat? Only $926,405 only. Okay. Credit discount, debit also discount on bonds payable, that is $73,595. Okay, the discount on bonds payable. And then we must credit, okay, the bonds payable 1 million, sold bonds at a discount on issue date. Okay, sebab kita dah jual, kita dah jual tu pada discount rate. So that's why we just got 926,405. Kalau kita jual at par, it means that 1 million lah kita akan dapat. Okay, debit cash 1 million. Because of we issue the bonds at a discount, so that we must debit with the discount on bonds payable is 73,595. Alright. So how the ledger for issuing bonds at a discount? Bond payable credit 1 million, but then we did debit for the discount on bonds payable 73,595. Okay. So discount on bond payables ni kita nak kontrakan liability account. Okay. So kalau kita tak letak discount on bond payable ni, kita punya journal entry tak akan balance. Okay, debit cash 629 dengan bond payable 1 million. So tak balance, right? So debit and credit for accounting treatment must be equal. Tak boleh satu terkurang ataupun satu terlebih. So that's why we must contra the liability account by debiting the discount on bonds payable. Okay? This is the way how you record the journal for issuing bonds at a discount. Debit cash, credit discount on payable, and then credit bonds payable 1 million. Okay, can you understand, class? Alright. Okay, next. Okay, this is the step how we're gonna depreciate our discount of the bond. Okay, so this is the extract for the balance sheet. Okay, so long-term liabilities, the bond payable still 1 million. But then we must less with the discount on bond payable, that is 73,595. So we just got the carrying value is 926,405. Okay. So how? Okay, we depreciate or we amortize using the straight line method. Okay, the discount amortization or the discount on the depreciation will be 7360 every 6 months. Okay, how to calculate? So this is the amount, total amount of the discount 73595, and then okay, we must divide it with 10 periods. It means that what? 10 periods is equal to 7,360. Okay, every 6 months we must pay the interest around 10 periods. Okay, 10 times. Okay, so that's why in one period or in one time we must pay the discount amortization 7,360. So you must add on with the interest that you must pay to the bondholder. So that's why I said to you before this. Okay, if we sell our bond, okay, at the standard rate or at the stated rate is lower than the market value, so that we must add on the interest payment with the discount value. So that's the same thing. Kalau if we sell our bond using the same market rate, right? So sama saja pergi dia, macam tu. Ya. Dia kita still akan bayar interest tu lebih banyak berbanding dengan kita issue ikut market rate. Okay. On the balance sheet, the amount of the unamortized discount or that which has not yet been allocated to interest expense is subtracted from the par value of the bonds to arrive at the current carrying value of the bonds. Okay, using the straight line methods to amortize the discount, rules will divide the amount of the discount by the number of interest payment period during the bond's life. Okay, since this is a 5-year bond and it pays interest semi-annually, okay, because of uh, the maturity of the bondholder is 5 years. So times with 2, it means that every 6 months we must pay the interest. 5 times 2 is equal to 10. 10 periods of time that you must pay the interest plus with the discount value that we must amortize. Okay, 7360. This calculation, okay, 7360 for the in the 1 years we must pay the interest 2 times. Alright. So in one time you just pay the interest amount, the discount amounted to 7,360. Okay. This calculation determines that the discount amortized will be 7360 at every interest payment date. Right? So kita akan bayarlah setiap kali dalam setahun ada 2 kali. Okay, pada bulan Jun dan juga bulan Disember. Bulan Jun kena bayar 7360, bulan Disember pun kena bayar 7360 plus with the interest. Okay, So macam mana journal entry untuk record the first interest payment and amortizing the discount or depreciation the discount. Make the following entry every 6 months to record the cash interest payment and the amortization of the discount. Okay. So debit bond interest expenses 57360. So sepatutnya kita hanya akan bayar interest only 50,000. Okay. But then, okay, 50,000 sebab apa ni? Nampak 10%. Okay, ingat kita punya stated rate memang 10%. But then, if we can compare to the market rate is 12%. Okay, higher. But we just choose to sell at 10%, so never mind. Then we times with 1 million and then half year, and then you got 50,000 for the interest payment. Yes, of course, lower. The stated rate is lower, 50,000 only. But then you must add on with the discount on bonds payable. The discount that we give to the bondholder is bear by the business when we want to pay the interest. So at the 10% we must pay the interest only 50,000. But then we must add on with the discount on bond payables. So jadilah jumlah interest expenses kita bertambah. Daripada 50,000 bertambah dari 7360 so jadi 57,360. So even though we sell at the lowest stated rate, but then we must bear the discount. We must pay back the discount that we give when we sell the bond. Okay, until the bond is matured. 7360 ni kita akan tambahkan daripada interest. Interest yang sepatutnya kita bayar saja 50,000. Tapi disebabkan kita issue ikut rate yang lagi rendah daripada market rate. So that's why kita kena tambah dengan discount on bonds payable. 7360 tu. Mana datang? Ni daripada discounted bond payable iaitu 73,594. Sepatutnya kita dapat 1 million. Okay. Tapi disebabkan interest yang kita issue tu lower, so that kita hanya dapat 926,405. Okay. So kita akan menambahkan interest expenses kita kena bayar tu bukan lagi 50,000, but then 57,360. Okay, lagi bertambah pula expenses yang kita nak bayar. Okay. Okay, this is the straight line amortization on bond discount. Okay, dia ada table. Okay. Untuk the first, this is date. This is date. Okay, look here. Okay, we issue on the 1st January 2013. So the carrying value is only 69,405 because 1 million is already deduct with the discount 73,595. Okay, out of 1 million, okay, we just sell 92%, 92.6%, right? So we just got the value 926,405. Okay, another amount 1 million minus with 92,000, we got the discount value 73,595. That is on the issuing date. But then how we want to calculate the interest. Okay, on the 2013 we must pay on the 30th June. Okay, this is the first year. And then this is the second year. Okay, this is the first year that we issue. Okay, this is the first year. This is the second year. This is the third year. This is the fourth year. This is the fifth year. Okay, so instead of we must pay the interest payment throughout the maturity date, that is 50,000. Okay, can I ask you, how we want to calculate the interest payment? How to calculate the interest payment? Who knows? How to calculate the interest payment? Can you remember that? What is the formula? Joshua, can you remember how to calculate the interest payment? 50,000. Stated in before this, the last slide. Can you remember? Huh? Yes. Time. Okay, the time is up here. Okay, so that you will get 50,000. That is the interest payment. Okay, the interest payment. Okay, that is the interest payment before this. But then, when there is a discount for the amortization, that is 73,595, we must divide 73595 with 10 period. So you will get 7360 per period. So that your interest expenses total is 57360. Because you add on 50,000 with 7,360, so you will get 57360 the total interest expense. And then okay, this is the discount. Okay, how will you calculate the unamortized discount on the first year? This is on issuing date, and then on the first year 66,235. How we got? How come that arrived to that value 66,235? Who knows? 73595 minus with how come we will arrive to the amount of 66,235 on the first year? So throughout the years, okay, that's why I remind you before this, okay, throughout the maturity date. So the discount will be amortized until on the fifth year. So the discount value will come to 0 because of we already paid 7360. So that's 73595 minus with 7360, you will get 66235, and then minus with 736 again, so you will get 58875 until we amortize. We depreciate maksudnya susut nilai. So from 73,595 on the first year, the discount value will reduce to 66,235, reduced by 7360 that we paid with the interest expense. So until on the last part, the fifth year, so the discount amount will reduce to 0. Okay. So how about the carrying value? Okay, 926405 is when the date of issuing the bonds we got is 629405 only because we have the discount 73595, right? Okay, so how come the carrying value will go to the will higher, will increase throughout the years until okay until we reach on the fifth years until we reach the par value that is 1 million. Okay, so how come your carrying value is increased to 933765 because of the amount of discount here? Okay, add on with 7360, then you will get 933, and then times with 7360 also until okay the carrying value reach 1 million. Okay, is that clear? Any question on the straight line amortized of bond discount table? Is there any question that you want to ask? Macam mana boleh jadi bertambah ni sebabnya kita tambah melalui discount amortize tadi lah 7360, so dia akan menjadi 97376. Tambah lagi 7360 dapatlah 941120. Tambah lagi 7360 dapatlah 948845 sampailah dapat 1 juta. Okey, ada soalan? Okay, itu dah settle untuk discount. Okay, how about, okay, this is the effective of the interest methods, okay. So tadi kalau kita ikut kepada effective interest method ataupun ikut kepada market value, apa perbezaan dia dengan kalau kita pilih kita guna straight line, so sama saja. Okay, dia tak ada pun perbezaan yang ketara. Whether a company use the straight line or effective interest method, the total interest expense recorded over the life of the bond is the same. Okay, macam saya cakap tadi lah, kalau kita guna market rate, kita akan terus je tolakkan daripada yang kita kena bayar every month interest tu ikut kepada tak perlu tambah dengan diskaun. Tetapi bila kita kurangkan diskaun, kita kurangkan percentage untuk kita bayar expenses, kita akan tambah pula dengan discounted punya value. So dekat mana-mana guna mana-mana methods pun dia akan jadi sama sahaja. Okay. So tengok pula issuing bonds at a premium. Okay. Kalau at a premium tu, it means that okay, the interest rate Okay, we issue or we sell our bond, okay, by the stated rate higher than the market rate. So for example, if the market rate interest is 8%, so we sell at the bond at the 10%, which is the highest than the market interest rate, right? So it means that the bond will sell at a premium. Okay, so using the same company, Rose Company example, the par value 1 million. So the difference here is the stated interest rate, that is 10%, rather than market interest rate is only 8%. So kalau discount, it means that the stated rate is lower than market rate. But for the premium, the market is lower, the stated rate is high. Alright, so when we sell at a premium, it means that our issue price is 1081145%. Okay. So the interest rate is also 2 times per year, and then the bond date issuing at January 1st, 2013. The maturity date is 5 years. Okay. So if this example, Rose Company is issuing bonds with a par value of 1 million as stated interest rate at 10% with the interest payable semi-annually. However, the market interest rate on the issue date, okay, on issue date, the market interest is just 8%. So how many investors we want to buy? Of course, a lot of. There is very exciting, very interesting for the bondholder because the interest is higher. So we can increase the price of our bonds and they will still be attractive to the bond investor. Bila kita higher at the selling price lebih tinggi, okay, so kita akan attract bondholders ataupun bond investor. Okay. In this example, Rose sells its bond for 108 of its par value. Okay, so the premium in the selling price is that more than the par value, right? 1 million is only the par value, but the selling price is higher than the par value. It means that we will get the excessive money from that selling bond at a premium. Okay. So the premium and then the premium will reduce the effective interest rate that the investor will earn to 8%. The same goes like the discount we must add on to the interest, but then with the premium we can actually reduce our interest rate. Okay, let's look how the treatment of issuing bonds at a premium. Okay, the cash that the Rose Company will get is 1081145. Okay, so we minus with the par value is 1 million, so we got the excessive money. The premium is about 81,145 rupiah. So how we got 1081 because of they said they want to sell with the 108.1145% higher than the par value. So this is the amount. Okay, and then so we also must the premium also must depreciate. Okay, amortize the premium decrease, but then the premium value will reduce. Okay, before this, if discount increase the interest expenses, but when the premium So the interest expenses, our payment for the interest expense will decrease. Okay. Rose will receive cash 1,081,145 from the bond invested. The difference between the par value of the bonds and the cash price received is the premium we charge the bond invested. Remember that the whole reason we could offer the premium is because of the difference between the stated rate and the market rate of interest. As a result, the premium represents a reduction in the interest expenses recorded over the life of the bond. Amortized the premium will decrease the total interest expense recorded for the bond to equal 8% the market rate of interest. So sebabkan kita nak kurangkan interest expenses kita, pembayaran kita based on because of we have the premium, so at last dia akan jadi percentage rate yang kita kena bayar, at last dia akan jadi sama juga 8%, sama dengan market value. Okay. Kalau discount tadi, bila kita dah ada discount and then kita tambah dekat interest expenses, so dia jadi sama juga dengan interest tu, dah jadi sama dengan market rate. Okay. But then for the premium dia akan mengurangkan sebab dia dah terlebih tadi kan. Kita issue percentage dia higher than the market value kan. Market value rendah. So untuk samakan level dia dari 8% juga, so kita kena tolakkan interest expense daripada amount premium. Itulah maksud dia. So tengok dia punya recorded bond issue as follow: debit cash, credit premium, credit dan bond payable. Okay. Kalau tadi debit cash, debit discount, credit bond payable, but then for the premium we must credit. Okay, take one fold part, we must credit, and then bond payable 1 million is the same. Okay, so what is the T account for that? Bonds payable 1 million is at credit side, and then premium on bonds payable also is in credit side. Okay. On the issue date, Rose will debit cash for the amount of the cash proceeds. But then the credit bonds payable for the par value of the bond issue, and credit premium on bonds payable for the difference between the two. Premium on bonds payable is an adjustment liability or acquisition account and has a normal credit balance. Okay. The T account illustrates how the bonds payable account and the premium on bonds payable account will look immediately after the issuance of the bond. Okay. So sama juga lah tadi, kalau discounted debit cash, credit, debit kan juga discount bond payable. But then kalau as premium, kita kena debit cash, credit, premium on bond payable, credit bond payable. So next, making the first interest payment and amortize the bond premium. So the extract for the balance sheet, long-term loan bond payable is 1 million. Add on with the premiums on bond payable, 81145, so that our carrying value is 1,081,145. Okay, so that is the maturity date is 1 million. Okay, using the straight line method, the premium amortization will be 115 every 6 months. Because of 81,145, we must also divide it with 10 periods. So that's the amount that we must deduct from the interest payable is 8115. Okay, so let's look at the journal entry for interest. Bond interest expenses is for 50,000, right? 50,000 is the amount that interest that we must pay. 50,000. And then what? Because of we have the premium, so that our cash paid for the interest is the total is lowest. Okay, so the bond interest expenses is actually only 41,885. Because of the premium, we must deduct 50,000 with the premium for uh, the premium expense yang kita nak kena bayar tu. Okay, dia dah mengurangkan, interest expenses yang kita akan bayar. So dia jadi 41,885. 41,885. Okay. So kalau tadi expenses kita bertambah jadi 57 macam tu kan. But then because of we offer higher interest rate from the market rate, so kita kena tolakkan lah. So jadi interest expenses kita hanya bayar 41,885. So let's look at the table of amortization bond premium. Okay. The bond premium, so the carrying value is 1081. So the premium, the excessive money is 81145. So actually the interest payment is 50,000, but the expense is only 41,885 because of we must deduct the interest payment 50,000 with the premium amortization, that is 8115. So we just expense 41,885 only. Okay, then 81 we must minus with 8115. We got the 73030 until, and we amortize the premium amount until on the 5th year. The amount of premium we got zero. Same goes to carrying value. We also must deduct the carrying value with the amortized premium. Then you will get the carrying value 1073 until you got the premium at the carrying value on the 5th year of the maturity date is only 1 million. Okay, not 1081. Okay, because the par value is at 1 million. So this is the total. After 5th year, you will get the total of amortization for the premium is 81,145. The same goes to interest expenses. Okay, when 500 is minus with 81145 is 418855. Okay, that is the straight line table. Straight line amortization of bond premium table. Okay, can you differentiate between the bond at selling at discount and also premium? Can you differentiate, class? Is that clear, my dear? Yes. Okay. Mm-hmm. Mm-mm. Yes. Sebab dia kurang. Sebab dia discounted. Tapi yang premium dia terbalik. Yang ini premium. Kalau premium, carrying value dia tu yang akhir sekali punya table tu you kena tolak lah. So dia akan dapat tolak, carrying value dia akan mencapai 1 million. Tolak dengan yang kosong ni pula, kita nak depreciate yang amount premium. Okay, amount premium dengan amount discount pun dua-dua kita kena depreciate. Ataupun kita kena susut nilaikan supaya kita nampak last kali kita dah serapkan segala premium ni, kita dah tolak daripada interest expenses. So dia akan jadi kosong. Maknanya sikit-sikit kita masukkan. Sikit-sikit kita tolak, sejadilah dia jadi kosong pada tahun kelima. Macam tu. Macam tu Okay. So, next apa ni? Okay, bond retirement. Okay, kita berehat sebentar. 5 minit. Okay. We take a break for 5 minutes and later on we will come to finish the chapter 3. Okay? Okay, class, let's continue a little bit because after this I have a meeting with the management. So let's continue a little bit before we leave. Are you ready, class? Alright. Okay, so next slide is about yeah. Bond retirement. Okay, what is the bond retirement? Okay, bond retirement means that the bond that have a maturity date. Okay, kita macam ni. Kita retirekan sebelum dia punya maturity date. That is bond retirement. Okay, sebelum waktu dia matang lagi, kita dah cut off. Okay, bond tersebut. Okay, so let's look at the slide. The carrying value of the bond at maturity always equals its par value. Okay, sampai kepada tarikh maturity, bonds tu akan jadi sama dengan par value. Contoh 1 million, okay, at the end of the maturity date, dia akan jadi 1 million juga. Okay, but sometimes bonds are retired prior to their maturity. Okay, ada juga bonds yang kita cut down kan dia punya waktu dia sebelum daripada maturity date. Okay, the two common ways to retire bonds before maturity are through the exercise of a callable option or through purchasing them on the open market. Okay, so bila ada callable bonds present several accounting issues including calculating gains and losses. Okay, macam mana kita nak tamatkan bond tu pada waktu sebelum waktu maturity adalah guna callable bonds. Okay, callable bonds option. Okay, callable bond option ni apa dia? Cuba kita tengok dekat bawah ni. Okay, issuer sometimes, okay, issuer ni siapa? Siapa company lah the company itself wish to retire some or all their bonds prior to maturity. Sebelum daripada waktu maturity dia nak retire kan, dia nak call off kan. Most of the time this result in a gain or loss depending on what the price of the bond is at the time it is called. Okay, so semasa call up punya time tu sebelum pada maturity, so kita akan calculate lah sama ada bonds yang company issue tu dia akan dapat gain ataupun loss. Okay, gain tu bila masa mana? Nanti kita tengok. Based on the price bonds at the time. Okay, two common ways to retire bonds before maturity are through the exercise of callable option or through repurchasing them on the open market. Okay, kadang-kadang ada waktu dia nak repurchase semula, so dia akan callable kan bonds tersebut. So apa yang company tu kena buat, dia kena kira sama ada amount of the bonds tu increase or decrease. So kalau dia kurang daripada par value, it means that the company is lost. Okay, dia ada kena bear the losses. Okay, kalaulah the bonds price at the time masa sebelum maturity tu dia higher than the par value, it means that the company will get the gain, will get the profit from the bond issuing. Okay, these types of early retirement, okay, early retirement usually result in gains or losses that require additional calculations and journal entries. Kata macam tu. Okay, so tengok cara dia macam mana. So you just sepatutnya bond retire at maturity, kita akan dapat bond payable 1 million and then credit cash 1 million, right? But then kalau sebelum sekejap kelas. Akak tak tahu akak masuk mana tadi. Mesti cuba cari dekat atas. Nak tak boleh on tu semua, tak boleh buka ke? Sejuk sangat Sorry class. Okay, let's continue. Okay, kalau before maturity, so kalau carrying value, masa kita call out kan kita punya bonds tadi, lebih higher than the retirement price, so that you will get gain. Okay, but for when the carrying value is less than the retirement price, okay, dia retired awal sebelum maturity lagi rendah daripada carrying value dia, so the company will bear the losses. Okay, that is the situation when the bond is retired before the maturity date. Okay. So now let's look at the long-term notes payable. Okay, long-term notes payable is different with the bond that we discussed earlier, right? So long-term notes payable is basically come from the lender, that is the financial institution. For example, bank. Okay. So look here, it's the company lend money from the bank, that the bank will give the company cash, and then the company will give the bank note payable. Okay, when is the repayment of the principal and interest going to be made? Okay, when the issuance date until the maturity date. Okay, that is the long-term notes payable. Okay, the notes are typically transacted between a company and a single lender, such as bank. Okay, when the note payable is issued, the lender provides the cash to the company, and the company signs a note payable contract agreeing to repay the principal plus the interest, for example. Okay, let's look at the two common ways to structure the repayment of the principal and interest. Okay, macam mana cara pembayaran? Pembayaran repayment of the cash that the company lend from the bank. Okay, kita kena bayar principal plus interest. Okay, same goes if you buy cars. Okay, if you buy iPhone, okay, you kena bayar interest plus principal. Okay, jadi mesti kalau kita hutang mesti akan ada interest. That is the what we say, the apply, that the interest the financial institution apply for nowadays. Okay, so tengok long term loan and long term notes payable, kalau ada certain the note principal and interest are paid in a single payment at the end of the note term. Okay, dia ada certain payable, note payable yang bila kita terus bayar pada akhir maturity dates tu, terus bayar lump sum principal plus interest. Ada juga kita akan bayar ikut kepada bulan-bulan. Every month we must pay the principal plus the interest. Okay, until the maturity dates, until the principal or until the payable is finished. Okay, so for example, if you make a loan for buying the cars. Okay, the payment is the same every month and consists of the interest and some principal payment. Okay, so this is the when the installment notes with the equal principal payment. Okay, so the principal is the same throughout the years, but then the interest will reduce. Okay, basically on the first 3 years is the highest interest, but then throughout the years the interest is reduced or decreased each year. Okay, but some of the payment, okay, some of the loans, the payment of the loan, the installment notes, okay, with equal payments. For example, the principal is increasing throughout the years, but then the expenses is the interest payment is decreased throughout the year. Okay, this is the example of the structure. Okay, contoh-contoh structure pembayaran semula notes payable yang kita dah pinjam. Okay, daripada financial institution ataupun bank. Okay, what about mortgage notes and bonds? Okay, mortgage notes is actually mortgage ni maksudnya gadaian. Okay, kalau kita meminjam duit untuk dekat bank untuk kita beli rumah. After that, kalau kita tak boleh nak bayar every month, then the bank will proceed to the legal action. So kita punya rumah tu akan digadaikan. Something like that. Okay, that is a mortgage. Okay, a legal agreement that helps protect the lender if the borrower fails to make the requirement payment. They require payment. So kalau kita gagal nak patuhi pembayaran tu, dia akan jual semula rumah yang kita pinjam, kita beli. Okay, so kenapa ada mortgage ni? Supaya dia melindungi lenders ni lah ataupun bank, supaya kita bayar pada waktu yang ditetapkan. Dia kata, a mortgage gives the lender the right to be paid from the cash proceeds of the sale of a borrower's asset specifically identified in the mortgage contract. Okay, most home loans have a mortgage contract that gives the lender the right to sell the house and be paid out of the cash proceeds if the borrower defaults on the loan payment. Okay, itu adalah mortgage notes and bonds. Okay, class. I think until that slide, so later on next week, we will continue with the next slide for the types of bonds. Type of bonds. Okay, dia ada banyak lagi nampak kita nak kena discuss. Okay, so can we stop here, class? Alright, so next week we will continue. Okay, so any question before we leave? Alright, so kalau tak ada soalan, so kita akan nanti setakat ni next week we will continue with the next slide on chapter 3 also. Okay, so thank you so much everyone for joining me today. Bye. You're welcome.
Thank you.
You're welcome.